Happy October from Sprott Money, sprottmoney.com. We are now 75% of the way through the year 2025 at the quarter pole, as they say, heading into the home stretch of the year. Very busy month ahead. And as usual, it starts out with your precious metals projections. I'm your host, Craig Hemke. Joining us, as usual, my old friend Chris Vermeulen of thetechnicaltraders.com. Chris, it's going to be fun to visit again.
Yeah, sounds good. Always a pleasure.
Let's always keep in mind, it is Sprott Money that brings all this content to you. Not just this, but there'll be new content through the entire month of October. With a lot of volatility ahead, you're going to want to stay on top of it. So be checking Sprott Money all the time. You want to subscribe, like, wherever you're watching this video or listening to it right now. And of course, there it is. SprottMoney.com should be a dealer of choice, not just in Canada, but in the US as well. Anytime you are buying physical. And they've got some right now. They've got those Britannias. They've got some Eagles. The next thing's going to come across is some new silver that they just got in. That's only a couple dollars over spot. So be sure to visit sprottmoney.com or call them at 888-861-0775 and thank them for all this content that comes your way. All right. And you should be watching this content. If you had watched last month's precious metals projection video, you would have been prepared for what came in September. Chris and I discussed the breakout above 3,500, how that maybe targeted something more like 4,100 in the weeks ahead in gold, and higher prices in silver too. September, gold up 11%, silver up 16%. Can they keep going as we get into October? Chris is going to help us out with that. But first and foremost, Chris, almost everybody probably has some exposure to stocks, U.S. stocks. It's kind of a bellwether for all of the global equity markets. So always try to start there. What are you seeing at present in U.S. stocks?
Yeah, I mean, obviously we're still in a very, very strong rally after the tariff sell-off. And if we just look at it from a pure technical standpoint, if we look at a color-coded chart of just simple red and green, when the technical analysis and money flows are negative, they turn red. We don't want to hold equities. When they are green, we want to be long. And of course, we're long the equities here, and you do not want to fight this trend, even though the market internals, based on my sentiment indicators on the right-hand side, we are seeing this market push higher, but the underlying technicals aren't the strongest. They aren't really that strong. So I am worried that we could have a big sell-off at any point here. But that being said, the markets can stay irrational for a long time and keep moving. And that's why we have to stick with the underlying trend. Now, when we look at the short-term chart, say the 30-minute chart of the S&P 500, we've gone from these what are so-called short-term overbought FOMO market conditions where the market usually puts a top in. And then we go down into these lime green, which is a oversold condition within a bull market phase. Now, here we are rallying back up today in the equities market as we're speaking, and we're back into FOMO territory. Now, the market, as you know, Craig, it's never really a straight line unless it's parabolic and going straight up. But the markets are kind of meandering their way higher with a series of higher highs and higher lows. And so right now, the market, here we are on Friday. I think people who were hitting all-time highs yet again on the S&P 500 and the NASDAQ. We have the VIX down low. This is the perfect scenario for maximum FOMO. And I talked about this about a week and a half ago when we were back over here at a previous FOMO stage. Right now, people who aren't long the equities markets are feeling left behind. And this indicator that we have, this red indicator, is telling us they're buying today. They can't take it anymore. They just need to get in. This is usually actually a short-term indicator, meaning the market is likely to have a bit of a pullback. And if we look at the daily chart, that simply means that next week, if we have a strong close today, we'll probably see the equities market gap higher on Monday because people who have FOMO over the weekend are going to put in their buy orders. And then we'll probably see a couple of days of a pause or pullback while the stock market kind of probably recoups itself over the next couple of days. So strong uptrend, short-term wise, all the signs are here that we're probably going to see prices higher today and Monday, but then we're probably going to see a bit of a pause or pullback, which is a good thing in the markets. We don't really want things to go straight up because it can make things also want to come straight back down because it becomes a kind of a crowded trade.
You know, myself, probably you, a lot of folks watching also own some Bitcoin as a dollar alternative. Your chart of the S&P makes me think of Bitcoin, which often tracks the S&P or tracks the Nasdaq, and I know it's moving back toward all-time highs. So hey, let's take a look at Bitcoin real quick.
Yeah, yeah. Bitcoin's had a nice run. It really was out of favor and out of sync with everything there for the last like month or so, but it has really kind of picked up speed. It's starting to run higher. I think this is we're seeing, I think, aggressive money really pile into the market here. We're seeing small caps and micro cap stocks really pop and push higher. And that's telling us that, hey, money wants to get into stuff, fast moving things. It wants to make more money, which is perfectly normal and usually what happens in this type of scenario. So Bitcoin does have this potential here where it's going to have another big breakout. We can even throw a
Yeah.
Fibonacci extension on here based on this last run. We can get an idea of that next upside push based on this pause and pullback is actually showing us about 139,000 up to about 160,000. Now, that is based on this current push. If we go back to the most conservative targets for Bitcoin, which I think are the ones that really we should focus on, it's going to be this pullback over here and this rally up and this pullback. And this is the one you and I have talked about many times that I've shared. This is the $135,000 Bitcoin target. So this is like the first level that if you're in Bitcoin for a trade only, this will be a level where you might want to move your stops up. You might want to take partial profits going forward. But the Bitcoin, when we look at it on the monthly chart, Craig, it does have these big series of bull flag patterns, meaning
Yeah.
it is pointing to higher pricing. So we had one huge run up here, and then it put in this beautiful bull flag, which is known as a halfway point. Based on that, we saw a breakout and a run up to this side, and my subscribers and I traded this play. Now it's consolidating, and now we just measured it, and this next move is the pullback and the push up to 135,000. You could also argue this type bull flag right here is pointing to that higher target, the first one I showed you, which is about 160,000 for Bitcoin. So there is quite a bit of upside potential here. The monthly chart is starting to break out, and it's looking pretty strong. Like it's wanting to run higher, like kind of what the equities and the gold market is doing. So it's pretty exciting. I mean, most people's portfolios you pretty much should be at all-time highs. And if you're in Bitcoin, stocks, precious metals, I mean, everybody's feeling pretty good right now. And I think the key is making sure you protect that capital, because when things are really good, usually what comes after really good are difficult times. So enjoy the ride, but have a strategy to manage risk in case something does happen and things do want to reverse kind of across the board.
You got me thinking the way that Bitcoin and stocks have been correlated. I mean, they're both pointing higher. You
Yeah.
wonder what type of monetary environment that would be that we are currently in that might be persisting and that might continue to drive gold and silver too. We'll get to those in a moment.
Mhm.
I also want to ask you though. I've got personally a little exposure to uranium. Rick Rule told me about it 3 or 4 years ago and said just give this some time. So I own some uranium miners. I own some uranium ETFs. Sprott Inc. Manages a very popular uranium ETF. I've been watching that stuff percolate here as of late. What do you think of that as a sector?
Yeah, I don't have the chart on me here, but I did some analysis on it 2 nights ago, and it was really interesting because I mean, I'm bullish on the space. It is definitely in a strong bull market phase here. It's got a bull flag pattern ready to
Yeah.
pop and push. Based on a couple different targets, we could see where this URA. I know there's several different ETFs on this, but you can see here, based on Fibonacci, which is this rally up and this pullback. Usually, what happens is if we come up and we hit and pause at the 618, which is the golden ratio, that means we're usually going to go up and hit that 100% measured move, which
Yep.
is $58 per share. So we could see URA run another 15% fairly quickly. This could be like a 2 week move. When it pops, it's going to run probably very quickly. So there's quite a bit of upside potential from that standpoint. Now, if we were to kind of give it the more aggressive based on this low and the rally high about a week and a half ago, and this high momentum pullback, it gives us another target, which is around $62 per share, which is around 24 or so, 23% upside. So there's no doubt we're in this big phase. You can see the volume on the chart on the September, October. Big money's moving into this space. It is really starting to go, somewhat it's taking off. And it's interesting because uranium pricing, spot uranium pricing has pulled back quite dramatically while, the uranium stocks have taken off. And it's interesting because when we saw the big multi-year bear market in uranium a long time ago, this is over several years, we eventually saw a big divergence. Which next time you're on here, when we do this, I'll show it. But long story short, if we look at the long-term chart, uranium stocks put in a bottom back here in 2020. Well, spot uranium actually put a bottom in 2016. And so, people took a real beating in uranium stocks. And even though uranium bottomed and went up about 300% from there to here, where uranium stocks put in a bottom, people didn't want to touch it. They got burned on every bounce and rally, and then they gave up on it, even though it had bottomed years earlier. And so what's interesting now, and a lot of people probably don't really want to hear this, is, we have this opposite divergence going on right now, which is we've had uranium pricing kind of spike up, and now it's pulled back. And even though uranium spot pricing is pulling back, we're seeing uranium take off, meaning people are very aggressive and they think it's just the start of a big rally. I would say uranium's had a huge rally already. I think right now we're just seeing a little bit more of that, kind of a little bit of that greed play of even though spot uranium has crashed and pulled back fairly substantially, people are ignoring it. They're like, no, I want in this space. I don't want to be left behind. So we're seeing uranium stocks push higher. And so to me, it's just a sign that I think we're going to see another push higher in uranium stocks. It's a momentum trade now. It's kind of a crowded play. And then after this next push, I think we might see it consolidate or pause for several months while it digests this move and starts to recalibrate. So it's kind of like everything else. The stock market is in a strong uptrend. I think it's going to push higher. Precious metal space, uranium, Bitcoin, we're in that kind of feeding frenzy. Enjoy the ride. And I think things are still going to keep going higher, but we just need to know that, I think eventually we're going to have a substantial pause and pullback. And you just have to be mentally prepared so you don't panic out of positions.
Always good advice. Just my own personal experience with uranium and anybody else has traded or owned those stocks. They move very fast to the upside and then they pull back and consolidate very quickly as well. You can really get caught wrong footed. And I think it's a very good commercial for your services, Chris, so that anybody that's trying to trade that sector, have Chris stay on top of it for you.
Yeah, we
All
played
right,
this
brother.
recently. This recent run up, we had a nice play in that in
Yeah.
URA. Yeah.
Again, that's something you really got to stay on top of if you're going to fiddle around with that sector. All right, brother, let's shift to gold and silver. And if we have time, the mining shares. Cause back in early September, really it began in late August, we started to break out. Everything signaled higher prices, the seasonality.
Mm-hmm.
Watch these videos. We've been talking about the seasonality in both July and in both the August and September versions of this program. September, October, very strong seasonal periods. And it eases. It picks up again December into January. So it would suggest there's still got a little ways to go in the gold price before the next consolidation phase. What are you seeing on your charts?
Yeah, well, if we take a look at gold, it's had a beautiful run. We've taken an extra gold trade beyond just holding physical metals. We've played this Fibonacci move, or we're playing this Fibonacci move here, which comes down to this multi-month consolidation. And this is one of the trades that we've got going on. So we had this rally up, we had this pullback, and this is a giant pennant, kind of a bull flag formation. And more or less, when it comes up and hits this 618 and has a pause, that is usually when we're going to see it want to run up to the next target, which is that about 4,100 that you and I talked about last month and the month before. This chart pattern has lasted all year. So these are long-term targets that we're finally working up to, which is pretty exciting. So, we're really just letting gold continue to work itself up. It's got a tight little sideways pause here over the last 3 days. It's primed and ready to pop to 4,100 pretty much any week now. And once it hits that level, it'll be interesting to see how it reacts. Does it pause and pull back really quickly and build another little launch pad to go higher? Or are we going to, blast through that? And I think we're in this unique situation where not only do I think the target is going to be hit, and you and I touched on this in our last session, which I think we could see gold and silver kind of go parabolic, where it could blast through this and actually keep picking up more speed and go parabolic in a pretty big way. And silver is very similar from that. And when we look at the monthly chart of gold and silver, you can see, I'll just zoom back so we can see these previous. We're starting to go pretty parabolic, where we're really popping. And another big month, the green bar here, is telling us that, hey, yes, it's money's been piling in, but it might be starting to move a little too far too fast. And so typically after that, we usually see some type of pause and some consolidation. And the question is, does it build a nice bull flag formation or pennant formation before it shoots up and goes even higher? We just really have to take it one bar at a time. But right now, I think we're going to see gold and silver push higher, blast past that. And the question is, where is the top in this kind of feeding frenzy? We got central banks piling in, we got individual investors piling in. Nobody wants to get rid of it because it's a winning trade, and natural tendency is to not sell winning trades. So we're just in this phase until this momentum stalls and a bit of pull selling kicks in. People aren't really thinking of selling, so it's going to keep the price wanting to run higher.
I'll give you one from that has helped me out. If you pull up a weekly chart, Chris, you remember your
Sure.
Fibonacci said 4,100. On a weekly chart from when we first broke out back about 2 years ago, and then into early 2024, price was going sideways for 90 days,
Mhm.
broke out in March of 2024, rallied 15 or 20%, consolidated 3 months, broke out, rallied 15 or 20%, consolidated 3 months, broke out earlier this year, rallied 15 or 20%, and now since just wrapped up a 4-month consolidation. And guess what? It's rallying 15 or 20% again. That would project to 4,100.
There you go.
So if you believe in the bull market, why not, get there to 4,100 sometime this month or next, go sideways for 3 or 4 months while we shake everything out.
Yep.
And then the fun really gets going in 26. Anyway, no one here to
the,
listen to me talk. They
the
want to
fun
hear
is
you.
already really going in the precious metal space. It's
That's
it,
true.
we got to enjoy this ride, right? The ride's been on for
Right.
a while, actually,
Right.
the past year and a half, but now it's really getting explosive, especially in the miner space. But let's take a look at silver, as you
Yeah,
said.
let's take a look at silver, because that's the one where on my site, all over Twitter, there's this kind of dichotomy. People are excited. It's like, hey, what's going to happen? Gold moved all-time highs, 80% past its old
Yeah.
all-time highs. Silver just getting back there. And we all remember what happened in 2011 at these price levels. Where do you stand with all this, Chris?
Yeah, well, when we look at the monthly chart of silver, there's no doubt it's going parabolic. And I'm not a big fan of when things go straight up, because it means a good chunk of it, when it does reverse, will be given back in most cases. So I'm excited. I do think we're going to see silver break above the 2011 highs. I think we're going to pop and break through that. We'll probably see silver spike dramatically higher. I don't know where it's going to go, but it's rallying to the upside. Um, you really don't want to be fighting this trend. But what's interesting is, if we look at the 10-minute chart down below here, we can actually see yesterday, which was October 2nd. If we look at the 10-minute chart, there was a pretty good bout of selling, high volume selling
Yeah, there was.
in silver futures. I mean, we got right up to 48, like right up to, pretty much testing all-time highs. So there was definitely some big selling going on. If somebody lightening up their portfolio, we kind of saw that another bout of selling, not quite as heavy the day before that, but there's definitely some sellers run. We're hitting resistance, and some sellers are unloading. It's actually the same for gold. If we look at gold 10-minute chart as well,
Mhm.
you can see
At
we've had,
39.
if we go back, there's 2 days of very strong selling in gold, a couple sessions ago, and again on October 2nd. So this is one of the early signs that there are some big institutions or some big investors that are saying, hey, we're getting frothy, and some people are obviously locking in some gains, lightening up contracts or their portfolio positions, which is, it's not a bad sign. This just means volatility is picking up, which means it can pull back and it can rally very quickly. So now we're getting into the battle of fear of giving back too much gain and fear of missing out. So we're going to have waves of selling, of people saying, oh, I'm
Mhm.
worried, I'm worried. And then we're going to have waves of it as it pushes higher again, of people saying, oh my God, I got to get in. Everybody's making money but me. And so we're in this phase right now where the volatility starts to pick up. Bigger rallies, bigger pullbacks, bouts of selling, big bouts of kind of FOMO buying. So that's kind of where we're at. I mean, at this point, you really just have to let this the next upside target really for silver is pretty much all-time highs. That's what I think it's gunning for, somewhere up to around 49, $50 an ounce. And we just have to let it unfold and let the price continue to kind of
Yeah.
blast higher until we see some signs of a short-term reversal and pause in the markets.
How would you even try to draw a projection? You know, when it does, I'm not sure it'll get through that 48.50 level on the first try, given how gold traded a couple of years ago when it was trying to make all-time highs. But
Mhm.
when it does break out, Chris, how do you, it's when you get in all-time high territory, how do you project where it might go next?
Yeah, I mean, it'll be tough. Um, you kind of need more price action to unfold. I mean, a really basic way would be you take the depth of
Oof.
the price action here, and you would literally just stack it on top.
Mm,
It's a pretty barbaric way. It does work. It does give you an idea of the volatility through this whole kind of basing and rally. You could see that move to the upside, which puts us around $85. I did talk a long time ago that somewhere in the 80s, if we break out, is potentially where silver could run into, like spike and shoot higher into. So just based on this long-term chart pattern, that's kind of the next target. At this point, it's hard to get a gauge. There aren't any other Fibonacci tools, like based on these runs here and these pullbacks. None of them break us up into where we are right now. We can't gauge beyond it. We've run past the target that I've had in the previously. And after that target, it goes to all-time highs. And then from there, it could just be the depth of this market. So it's pretty exciting. I mean, silver could really unwind. I had a member mention the other day, silver's at all-time highs, but if you figure in inflation and stuff, it's really nowhere near that. And maybe that $85 an ounce brings us back to what it, is worth in today's dollar and all of that stuff. So it'll be interesting to see where this unfolds. We're definitely in that kind of roller coaster / rocket ship ride. These silver and gold rockets are moving higher, and the miners are a pretty good indicator of how parabolic things are. If we just look at the GDX and go back, you can see the 2011, 2012 highs. We're now like really shooting straight up, and things are skyrocketing. It's the same with silver miners. If we look at the SILJ, it's also going parabolic.
yeah.
And so, as fun as exciting it is, we do need to be aware that usually when things go straight up and everybody's talking about it, everybody seems to be piling in. And if you say anything negative about this space, they cut your head off. That is like a red sign that, hey, we're probably going to see a little bit of profit taking. We're going to see prices probably put in a short-term top and some type of pullback to cleanse the market a little bit. And that's where I think we are. Is I don't know where the top is. It's hard to pick a top in a bubble. It's not worth trying. Just follow the trends up, ride them higher, ratchet your protective stops up. So if it does have a big reversal, you can at least lock in gains in case you're not around. And then you can reevaluate when to get back in. Because, each time we've seen a lot of the miners and silver miners get up with these parabolic moves, we usually see a good chunk of that move given back. And it's usually right when people don't think it's ever going to happen. Everybody's like, this time is different, which every time it's different. So that's kind of the scenario. We're in that perfect storm for precious metals, and everybody is on board, and they're riding it up.
Can almost lump it all together as with everything that we've discussed. Kind of a time for all risk assets seem to be moving higher, consistently higher, many of
Mhm.
them in all-time high territory. It does, I guess, lead me to two reminders. One, make sure you follow up and keep an eye on this space as we go through October, because it's going to be a very volatile month. But also, make sure you follow Chris. Chris, tell everybody what you do at the Technical Traders so that as we manage this month of October and beyond through all the volatility, how you can help.
Yeah, sure. Yeah, my whole focus is providing education. I show everybody each morning, kind of before the opening bell, of what the markets are doing, where they've gone, how it's going to affect our positions. And then really, I just manage my own portfolio and I share the exact trades and the reasons why I'm doing everything. And I trade ETFs and we just navigate these markets and really just kind of ride the coattails. It's all about having consistent growth. So I don't swing for the fences. I'm looking to preserve large chunks of capital so that no matter what happens in the market, whether it's a financial crisis, flash crashes, COVID, to 2022, little baby bear market, we just continue to watch our account move up and to the right. And we just navigate these markets with position and risk management. So it's not about, making huge trades. That's for a different portion of a portfolio. This is for larger portfolios that want stability and not have to worry about it. And it's really just following my trades. And I do about 5 to 12 portfolio adjustments a year. And that's what I do.
And I know Eric Sprott is a big fan of your technical analysis too, so we can put that as put that feather in your cap, I suppose. Well, here we go into October. Always pretty volatile month from a market history standpoint. We'll
Mm-hmm.
see where we go. It's going to be fun to visit with you as we come around November, and I look forward to it.
Yeah, sounds great. Thanks, Craig.
Thanks for your time, Chris. And again, keep an eye on this Sprott Money channel so you don't miss anything as we go through October. Another Ask the Expert segment, more a monthly wrap up, analysis along the way. We'll try to help out as much as we can as the fourth quarter of 2025 begins. From all of us here at Sprott Money, sprottmoney.com. Thanks for watching, and we'll have more content for you as October continues to unfold.